Hi Sandy, thanks for reaching out about your concerns, and this is a video for you and your husband or any other couples that you know. Hi, my name's Stuart Long. I'm going to make this bigger down here. My main website is stlpsi.com, and that stands for STL Professional Services International. And I've grown into business consulting, but it's been 20 years in financial services, so you can actually come over here to About. And if you want to read about some of my history here, um, navigated the past 20 years as a financial advisor, an entrepreneur, and life coach. Foundations in advising on finances, trusts, endowments, and business entity structuring, debt refinancing, debt consolidation, pension setup, income gap planning for couples as you age, and estate planning solutions led me to into consulting, and we can do some of these other things too. So if you want to look at our team, that's under About. But back here's kind of the main page for business consulting at the very back here. And most business owners, as you start your own business, you're going to want to do these things: increase the value of your company for sale, increase your profitability, your sales, reduce your expenses, pay less taxes, free up your time. So that's kind of me in a nutshell. But I wanted to do this for you. I call this now versus new, and we're just going to get this out of the way. So if, assuming you guys, I don't know exactly what your ages are. If you're 55, we can put your age as 55. If you're 60, that changes things. If you're actually both 64, that's a different story. But let's just assume you're both 55. We've got 10 years to work with you before you retire. What we have here is the average income in America for most couples is $60,000 per spouse. So we're just going to use the average. This will apply to everyone that you want to send this video to at work. So if you're making as a couple $120,000, that seems to be the average income. We can of course do a custom adjustment with each and every with each and every spouse. To put your exact numbers in here. So if you're both only making $30,000 and living on 60, we can do that. But let's just go with the average income for the average American is I think it's actually technically about 65,000. It might be 68 technically to be exact, but we're just going to use 65,000 each. So you're making 130,000 a couple. And typically when we look at this on the now versus new side, that's what you're making, and then you might be paying 25% federal tax, and then I don't know, this is all coming out of your check. This is SSI, Medicare, Ohio, City of Columbus, that kind of thing. So what ends up happening over here is that you're going to pay 37% taxes. We can adjust these to your story, but out of 139,000, you're going to either pay the IRS this year or you're going to pay your IRA. So this person didn't take any of the deductions that you're going to see over here, filling up a 401k and IRA. So they're just going to pay the whole 37% is what it all adds up to. They're paying $49,000 to the IRS, which they will never see again. Over the next 10 years I'm going to work with you, that's a loss of $492,000 that is not going to be compounding at 3%, 5%, 6%, 7% interest. It's just a tragedy. How much do you save on taxes? Zero. So we don't want that to be your experience. So I made this proprietary software to show you just a real simple comparison. I call them now versus new. So if we come over here and max out your 401k, you're allowed to put $346 a week. There's 52 weeks. So if you multiply that, we get your 18,000 in it for spouse 1. Down here, we're going to do it for spouse 2. And then if you do your catch-up, if you're over 50, you can put another 6,000 each. And then you can actually contribute to an IRA, both of you. And then you can do an IRA catch-up. And then, of course, you'll have mortgage interest deduction. So my job is taking the $130,000 and creating as many legal tax deductions as possible to give you what you didn't have over here you probably did have mortgage deduction on this side, but this gets you $72,000 of a tax write-off. So instead of showing the government $130,000, you only show them that we made $72,000 this year. Or you actually get to deduct up to $72,000. We can make these numbers smaller if you'd like. But now you're only going to show, instead of $130,000, you're only going to show $58,000 roughly, dropping your income bracket as a couple filing jointly, most likely, from 25 to 15. And then these things come out of your check. But you're going to see here, instead of paying $49,000, losing $49,000 to the IRS, you only lose $16,000 to the IRS. So we're going to keep the difference, which what's 49 minus 16? About $33,000. So over 10 years, instead of paying $492,000, let's just call it $500,000 to the IRS, I've just saved you a bunch of money, and you've only paid $161 out. So your savings is $331,000 that I saved you, and that should, over that time, pack away $720,000 just in that 10-year period. If 72,000 times 10, that's not without any interest compounding. And you probably know the story of that. Every dollar you make in interest becomes a soldier that you deploy. So if you add the value together, 300,000, 700,000, roughly, you just received about $1 million of value. Okay, so assuming you are 55 over here, and you are going to take this opportunity to max these out, then we come over here to some custom planning I've designed, and at that point you'll have your IRA assets will be up to excuse me, $720,000. And if we take those 401k's and roll them out of the place where they're exposed to 100% loss in the stock market, if I can get that under my control for you with your Social Security number on it, you're not beholden to whoever's running whatever fund or mutual fund there, where you could lose all your money any day of the week. We'll get it into somewhere that's guaranteed. But at 55, if I can roll over the amount you saved, $720,000. If you're just making 1% in your accounts over the next 10 years, that's going to grow to, by the time you're 65, that'll go up to $795,000. If you can make 2% in there, you'll have $870,000. If you make 3%, which is a conservative growth rate in a mutual fund, you'll have $967,000. If you went moderate aggressive, you might see 5% for $1.2 million. And if you're moderate aggressive, you might get $1.4 million, but you might lose a third of your money any day of the week where you're at work. So getting safety and guarantees and some bonus riders on here for guaranteed lifetime income is probably something you want to look at. So typically I'll see people maybe getting 3% in the market if they're conservative. Let's say 4% is what typical financial planners plan to spin off. So if they can make you 4% a year, whatever they're trying to do, and every mutual fund is lost to the S&P 500 for 30 years in a row. So all mutual funds really stink compared to just being in an index. None of them have ever beaten them consistently. So we can turn your $720,000. If you leave it where it is and you are making 4%, you might have $1 million by the time it's time to retire. But you might lose half or all of this money. So if you don't want to lose any of it, I can talk with you about giving you my rollover service to get into an account where you can never lose a penny, and it can only go up in value. The value won't go down unless you make withdrawals to spend, okay? And then how that would look is you might get a bonus on the front end. I don't know if I've set that up to calculate. Sometimes you get 3, 4, 5% bonus. But on your lifetime income, you might get a 10% bonus. Some of these are giving you a 30% bonus now. So if you give me $720,000, I can set up a guaranteed pension with a hypothetical number that gets maybe a 30% bonus, instantly putting you at $1 million. But we'll be real conservative and just say 10% now. But it'll be this big, and then it's going to roll up with just like your house has has insurance on it, and your car has insurance. We can take your retirement and put a wrapper around it, and they'll guarantee that you're going to have income for life. So in this case, your 720,000 gets a 10% bonus. It's going to start day one at 847,000 and roll up at 7% compounding. So 847,000 times 1.07 equals that, times another 1.07 equals that. Keep going till you're 65, and you should have 1.5 million. Now, when you retire, you're not going to pull this money out. You only want to live off the interest. So they will guarantee you, if I set up your pension with your own private money, since it's on you now, the company won't do it for you anymore. But I can do this for you. We can get you a guaranteed 5% income for life typically at age 65. And 1.5 million spinning off 5% would give you annual income of 77,000. That's a monthly check of 6,492. This is all IRA money, so it'll have to be taxed, and you'll have about 4,800 a month to live on. So at this time, I like to rush back over here. If you're living on 65,000, you've heard that inflation is about to go bonkers, right? So if you're used to living on, let's say you guys as a couple are making 130,000, and if we multiply times the typical 3% inflation they've been lying to us about for 1 year, next year to buy the same amount of stuff, if inflation is 3%, you'll need 133.9 to buy that stuff. 2 years, 3, 4, 5, 6, 7, 8, 9, 10 years till you're 65. To buy what 130,000 buys today in 10 years, if we're talking 3% inflation, you'll need $174,000 to buy the same amount of stuff. Now that's the lie. Here, let me show you the truth, and it's just better to know. 130,000 times true inflation right now is 1.11. So it's actually 10%. Sorry, I did that wrong. So we have what 130,000 a year is what you're used to living on. How much am I going to need at 65? So if you're living on 130,000, they assume at retirement that you only need 70% because you've paid off your house and your car. And, you paid your debt down. So you actually only need 91,000. So 91,000 times, we're just going to use 10% inflation is what the index jumped to when they printed $40 trillion this year. And you guys understand that in all of time in America, there was only $2 or $3 trillion ever printed in the whole entire history since 1774 or whatever. They just printed that's 2 or 3 trillion. They just printed 40 trillion, and they keep adding another 2 or 3 trillion every year. So they're literally destroying our company by printing too much money, and no one's stopping them. It's a tragedy. So you're 91,000, which is 70% of what you need because you should have the house paid off. If we multiply this for 10 years, age 55, that'll be 56, 57, 58, 59, 60, 61, 62, 63, 64, 65. So you're going to need $236,000 to have 70% of what your buying power is right now when you're turning age 65. So I need to spin off $236,000. Okay? So we're going to come over here and see what is 236,000 divided by 12 months. I need a check of 19,000 coming off a month over here, and it looks like your monthly check will be 6,400 instead of 19,000. So we're short, but at least we've got something coming in. Now, if you wouldn't tell me your age, but if you guys, I don't know, I'm just going to make a guess. If you're 63 and you only have 2 years to do this, we're only going to have 144,000 in there. Now, what you have in your IRAs, if you each have 100,000 in there, I'll just put another 200,000 into the pot here. So now we got more to work with to get that 19,000 a month spun off at age 65. If you're older. Yeah, so at age 65, we come over here, it's only going to spin off 1,800. So I need your real numbers here to find out what's really going on, and I'll need each of your real ages. But I like to catch people at 45. So if I can catch you at 45 and we can max out all this stuff or as much as possible, then I have from 45 to 55. And then I have another 10 years till 65, so I can have a nice chunk of $3 million for you. And then the income rider will roll up actually to much more. It'll double. So whatever you start with, 1.6 doubles at the 10-year mark to double, and then that doubles again from 3 million to 6 million. And these might sound like big numbers, but look, it basically needs to be able to spin off the amount of income you need. So that's kind of a quick look, and then we can do, we can come over here and do a, we can look at your monthly budget, see if there's areas to find things. We can do increase your monthly income with some of these different payouts. You might have a couple pensions or IRAs, and then we can look at the taxes to your heirs and try to increase that with some smart planning. If you have real life insurance or not, or just term, that's just going to become too expensive every time. And then look at what estate we're going to try to increase the new amount to each heir, depending on how many heirs you have. Okay, so we can get into this, but I think this is a real good rough idea of what I can do, and of course who I am. And I work with business owners because they are about the money. But if you want to come on here and book a service, you just want to come in, look for the tax, retirement planner meeting. So when you come in here, you can watch this video if you'd like, but just book a meeting for that, and this will take you to the calendar, and you can book a meeting for that. Okay? All right. Sounds good. Thanks for taking a look at this. Look forward to meeting you guys and doing our Zoom for each couple, if nothing else. But I do typically come do house calls still for people to meet at their kitchen table and go through all your assets. So you don't want to have your checking accounts and your savings accounts, your investments, your IRAs, your 401k'S, all together, and we'll get you a net worth assessment, income and expense evaluation, look at your assets and liabilities. Then you'll have a financial income statement put together, and then we'll go through a trust. And what we typically do with the new client is I'll print this out, my company, Estate Planning Solutions, and we'll come through and kind of, if you do have a trust, we'll check your trust. We'll go through each and every one of your properties and financial accounts and verify that they have been put into the name of the trust or not. And if you have any legal advice or any kids that need kicked out of the will or put in, we can do that. If you need life insurance, we can get that. We'll go through your income and expenses here. Then we'll go through all your assets and get you a net worth assessment down here. And then we'll go over some of these questions about is it your money to leave on or live on. So that'll kind of be our first step. And then if you've never talked to someone about getting your ducks in a row, this is a sheet that you can go through with your spouse and read this. What's coming up? But then we also do a beneficiary check. Here's Word. A lot of times people don't put the right beneficiaries down. Okay, here's ducks in a row. So putting your, if you're single or a couple or you have a trust, you'll have different things that you want to check as we do some of these services. You can just pause the screen and read these if you'd like, and shrink that. Updating your beneficiary list with your kids, their name, relationship, of course, is easy, social, and the percentage and their date of birth, and then we'll sign that. Make sure you have your beneficiaries correct. A lot of people I find have missing beneficiary info on most of their stuff. Let's see. This is good set of questions to go through with your spouse. You can read through these, pause the screen, pause the screen, pause the screen. So you can take a look at that if you'd like to go into some estate planning. But basically, that's kind of where we are for now. So let's just get together and do this for you and your husband. And if you're both making lower income, you take a quick look at if both spouses are making 30,000, making 60 as a couple, and if you put this back, if you're age 60 here, we can run that scenario, and then we can just decide if you're putting if you're only putting $50 into each of these. Everything will be a little bit lower, and we'll have a different amount to work with over here. So we might have 143,000, and what I can do is, whatever, I don't know what you're making in there. Some people getting 1%, I see, but if you're making 1%, you're 143,000. By the time you get to 65 in 5 years, it's only going to be 150. I'd rather take it and drop it in here, get you a bonus, and give you a guaranteed compound of 7% growth. So instead of having 150 most likely, or even if you're making 3%, 165, I'd rather get 7% and make 220,000, and then at 65 kick off 5% off of that, which is 11,000 a year. That's an extra 919 a month on top of your Social Security. Okay, and then after taxes, probably 689. So just getting the real numbers in here is the most important thing, and the real ages, and that'll be up to a real fact finder appointment. Charge about $250 an hour for this, so it's typically $4.99 when we need 2 hours. I like to meet at 10 a.m. at your house. Just make a pot of coffee, and we're going to do a work session and get into it. And I'll call every asset on this sheet here. Let's see, this one. I'll go through each asset and call them and ask them my questions. So if you have mutual funds, 401k stocks and bonds, I'll go through and get all these questions answered on the phone. Go through your life insurance, and a lot of older people have these because they're the safest way to have your money not in a bank which has no money. And then we'll find out what your areas of concern are. If you just want income replacement, state recovery, wealth transfer to the kids, catastrophic illness, or final expense. So depending on what your needs are, we'll focus on that and meet them, okay? All right, hope this is what you wanted to hear about Sandy. I hope this helped you, and look forward to helping you and your husband figure out what you're going to do for the rest of your lives. Bye-bye.